Welcome back, and joining me with more insight on the day's trade is Annatjie Van Rooyen from Regenesys Business School. Thank you so much for your time, Annatjie. Oh, let's start off with geopolitics. I mean, there's so much volatility there, you never know. Just unpack this for us, because there seems to be a lot of information going around between China and Trump, and you're not really sure what is happening, because the U.S. Secretary, Treasury Treasury Secretary, actually earlier on in the week, had actually said that there's a big opportunity for a deal between the U.S. and China. And then the next day, China says there are no talks happening between the two nations. And then Trump comes out and says the next day that there are talks happening between the U.S. and China. What are markets trading on at this point? What's your reading of this?
Yes, I think sanity is actually prevailing for a change, as the markets are ending the week on a positive note, with market action actually being dominated by strong first quarter results from Alphabet, but also on the back of a de-escalation in trade tensions between the US and China, with China announcing the potential exemption of certain tariffs on the US. But this is only a proposal at this stage. And we have also witnessed the Trump administration taking a less aggressive stance on tariffs. But China at the same time is rolling out emergency financing and policy tools to absorb possible shocks caused by a continued trade war. Another catalyst underpinning risk sentiment at the moment is dovish commentary from two Fed speakers during the course of this week, and both members actually flagged June as the month for a possible rate cut based on economic indicators, of course, especially the labor market indicators.
Oh, all right. Well, let's actually drill into Alphabet. And it's quite crazy how things change, Annatjie, because a few months ago, we had tech in a dump because of DeepSeek. And then obviously they suffered because of the tariffs. But now they've actually been rallying. And as we saw from the Alphabet numbers, tech is still doing quite well, as it surprised to the upside. What's fueling that momentum?
Yes, the Alphabet came out with very solid first quarter results. The company beat analyst expectations, and they have reiterated full year capex for 2025 of $75 billion. And this is the number that all analysts have been waiting for. And this means that there is no slowdown in demand for data centers and AI. So the earnings per share came in at $2.81 versus 2.01 expected. Cloud revenue was slightly lower than expected, but margins have nearly doubled from 9.4% to 17.8%.
Wow.
So this really is a stellar result, and these companies have derated and actually are trading at levels where they really do offer value. If you can just shut out the noise and the volatility and stick to stocks that offer value, you still have to have these in a portfolio.
Yeah, but investors not feeling the same way about Intel. We had that stock being punished heavily today after its own results. What was bugging Intel there?
Intel actually also reported better than expected Q1 earnings, mainly on the back of outperformances driven by client computing and AI. But the Q2 forecast disappointed. See, in the case of Alphabet, they didn't really provide specific guidance, but that capex commitment reassured the markets. In the case of Intel, that forecast for the second quarter, they're projecting revenue of between 11.2 and 12.4 billion, below 12.8 expected. And this is mainly due to macroeconomic uncertainty, but they have also emphasized cost-cutting measures. The new CEO has also acknowledged that past innovation struggles have cost him, and he has pledged improvements. And we now have to await the strategy amid trade war risks, including potential tariffs on semiconductors and China-made devices.
Yeah, well, talking about struggles, Implats came out with a production update today, and that share actually, as we're recording this interview, it took a knock of 6%. Not good numbers there, as the CEO is citing a number of headwinds. What's your take on those numbers that Implats came out with?
The market very disappointed in those numbers. Group production volumes have decreased by 5%. And as you have mentioned, various reasons for that, maintenance at the SA smelters, adverse weather conditions, power and water interruptions, and some other challenges. But gross refined and saleable PGM production and sales volumes actually increased by 1% to 2.5 and 2.55 million ounces. The CEO has reiterated previously provided group volume and unit cost guidance for 2025, with refined and saleable production expected between 3.45 ounces and 3.65 million ounces, and unit costs between 21 and 22,000 rand per PGM ounce. So the outlook is positive, even though the production update itself was disappointing.
All right. Well, let us end on an even more positive tone. Annatjie, your stock pick for today.
I'm going to go with Process Annatjie. The stock's still trading at a discount to net asset value and well below the consensus target price. Investors get exposure through Process, to the Chinese tech giant Tencent, which is operating in a much more friendlier regulatory environment than previously. And the company remains well diversified across different industries with blue sky potential in a number of companies.
Well, thank you so much for your time wrapping up the week with that analysis. Really appreciate it, Annatjie. That was Annatjie Van Rooyen from Regenesys Business.